So Skippr is a fintech company specialising in cash flow management. We help businesses understand and manage their cash flow more effectively. Think of us as a virtual finance manager, helping businesses focus on growing their revenues without having to worry about running out of cash. Alistair Lamond and myself started the business 2 years ago when Al was working at Market Invoice, the leading invoice finance platform in the UK. Both Al and I could see that the traditional and alternative lending platforms were flawed because of the point at which they engage customers. Traditional lending platforms engage customers after the SMEs determine they need a loan, which leads to a heavy reliance on finance brokers and direct marketing for sourcing deals. And this is increasing, these channels are increasingly getting more expensive. Yeah, so what makes Skippr unique is our cash management platform, which enables us to acquire and retain customers more effectively than our competitors. The reason being is that we engage the customer before they need a loan, which allows us to have a more consultative sales approach. We make money through invoice finance, which is an effective way to manage cash flow because it enables businesses to unlock capital tied up in their accounts receivable instead of waiting for 60 to 90 days for payment from their largest customers. Okay, so the way that Skippr acquires customers is typically through the advisor. We've built a tool that enables trusted advisors, such as accountants and bookkeepers, manage their clients' liquidity more effectively. To date, we've signed up 90 advisors to the platform, and these form the majority of our business connections. And we've written $6 million worth of loans with 0 defaults. Well, the key benefit from using the advisor channel to distribute our product is it allows us to build out our addressable market much quicker, and that enables us to then qualify deals more effectively. The Australian Bureau of Statistics estimates that there are 900,000 SMEs that earn between $1 million and $20 million in annual revenues. Eastern Partners estimates that 92% of these SMEs struggle to effectively manage their cash flow. Why is the number so large? Well, it's partly because of the profile of supply chains in Australia. Supply chains are typically characterised by oligopolies at one end of the supply chain and thousands of small suppliers at the other, which creates an imbalance in the negotiations. So smaller businesses are typically unable to negotiate favourable trading terms, and instead they're made to wait 60 to 90 days to receive payment for their invoices. Coupled with that, you have the banks who are facing increasing regulatory capital requirements to make loans to SMEs. And these two factors combined have led to a $76 billion unmet funding demand for SMEs in Australia. I have 17 years experience in financial services, primarily in risk management. I started my career in London and then I spent 10 years in Hong Kong, and I've been working in Sydney since then. My current role at Skippr is I lead the strategy, risk management and operations. Okay, so Alistair Lamond's my business partner. He has over 9 years experience in financial services. He spent 4 years in the UK with Market Invoice, where he helped build the sales team and the loan book to over £30 million. His current role at Skippr is sales, marketing and leading our channel partnerships. On our advisory board we have Andy Taylor, who co-founded Society One, and we also have Hayden Foster, who has over 20 years experience in building enterprise software platforms. So to date we've raised $1.3 million across equity and debt facilities. We've raised $300,000 in equity from sophisticated investors, typically investment professionals at the top tier investment banks. We've also raised $1 million through our Skippr Capital Fund, which has enabled us to underwrite $6 million worth of loans. So we're in discussions with 3 wholesale debt funders. We're looking to raise a $5 million debt facility, which will support our sales growth. So in the current equity round, we've already raised $750,000 and our target is $1 million. And we're using that capital to bolster our sales team and invest in R&D so we can grow our revenue, as well as invest in the product, improve our risk management.